is Chad Stayskull, President of Eagle Wealth Management. I'm here with our educational economic update for September 2016. So in this month's video, we're going to discuss some of the major headlines that influenced markets in August, and hopefully give you some insight into what it could mean for markets going forward. As always, please stay tuned at the end of this update for our required disclosure statement. Alright, so markets rallied for much of August on better than expected earnings reports and some strong economic data. However, official statements showing that the Federal Reserve is moving closer to raising interest rates again, it gave some investors pause. So, with the bulk of corporate earnings season behind us, we have a pretty good picture of how U.S. companies performed in the second quarter. Looking at the results of 483 of the S&P 500 members, we see overall earnings are down 3.2%, but revenues, they were slightly up by 0.1%. Now, while lower profits aren't good, corporate managers did an excellent job of managing expectations. Over 72% of those companies beat earnings estimates, and just over half actually beat their expected revenues. The stock market treated most of this news as a win, since traders were actually surprised by the positive results. Or I should say better than expected. The Federal Reserve was also a source of a lot of market activity last month. Minutes from the July meeting of the Open Market Committee showed Fed economists are pretty much split on their opinions about the economy and what to do with interest rates. Fed hawks, those who want to raise rates soon, believe the economy is strong enough to withstand higher rates as soon as September. The Fed doves, these are economists who favor a more cautious approach. They aren't convinced a rate hike needs to happen quickly, and they think low inflation and global concerns means the Fed should wait and see. So, we and most Wall Street analysts don't believe Fed will raise rates in September. However, there's a reasonable chance they might act in December. And if labor markets continue to improve, economic growth looks solid, we could see higher rates before 2017. Speaking of economic growth, we got our second look at gross domestic product for the end of August. The first estimate last month showed growth of 1.2%, and that edged down just slightly to 1.1% in the second report. Why? Well, broadly speaking, while consumer spending ramped up last quarter, business spending pulled back. This left economic growth stuck in neutral. What this means is consumer spending, the largest factor in U.S. economic growth, kept the economy growing. But businesses, they took a look at their shrinking profits and they closed up their wallets. What can investors expect in the coming weeks? Well, it's likely we're going to see more volatility. That's pretty much the norm. And perhaps we're even going to see a pullback as investors digest data ahead of the November election. The Federal Reserve votes on interest rates this month, and that will also add to some of the speculation. As always, we're going to keep you informed. So that's it for this month's educational economic update. But we do have a couple of upcoming events we would love to share with you. First, if you missed our halftime economic review seminar in August, please feel free to visit our website at www.myeaglewealth.com to view a video of the presentation. Next, we're teaching our Create Your Own Retirement Analysis class at Central Oregon Community College here in Bend this October. This class is for pre-retired and retirees who do not have a financial analysis or who are not working closely with a certified financial planner. This is not a class for current clients since we already cover the class topics in our personal meetings and go much, much deeper. Instead, this class is a great fit for any friends you've been wanting to introduce to us. More details will be available on our website. Finally, and we're excited to say, our annual client appreciation is September 24th at the High Desert Museum here in Bend. If you can, please RSVP to Terry here at the office, and we really hope to see you there. Once again, this is Chad Stayskull with Eagle Wealth Management signing off for the month of September 2016. Now, to keep the regulators and attorneys happy, please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call at 541-330-0220. We'd be happy to talk with you. Now, while we believe the information in this report is reliable, we cannot guarantee its accuracy. Our opinions are expressed or subject to change without notice and not intended as investment advice or solicitation of the purchase or sale of any security. Please consult with your financial professional before making any investment decision. Take care.